Hello traders, welcome to my website and congratulations for well receiving this video. So this is part 2 of this video and the last part of it. And in this video I will be showing and talking about the application of what we have learned in the first video. So how to apply it. As you know, you have learned the whole theory in the first part, and as you know, we always learn the theory and we start applying it, practicing in different modes. So you need the best mode, the best practical method. So how everything works in practice. And that's what is going to be explained very well in this video. So I will start by showing you how to apply what we have learned in the first part. And let's remember some stuffs that we are always using these EMAs because everything in technical analysis, mainly almost all the indicators are made out of many mathematical equations that are made out of the EMAs. The moving averages in general, and we are using exponential moving averages as explained before because it's much faster. So since the whole technical analysis is using the whole indicators, technical indicators are using the EMAs, then why do you need to trade to use the technical indicators? You can use the initial part of them, the main one, which is the EMAs directly, which is much better. That's why using the EMAs is a key secret in forex trading, and that's why it's also included in the 1% trading strategy, as you can see. So in this one I will be showing how to apply the 1% trading strategy. What is the best way, the best practical way of applying the 1% trading strategy. And also, first of all, you will be checking for fundamental analysis. And I advise to be using the Forex Factory website. It's a great one. And you can see there the news and everything, how everything is made, and what are the upcoming news. You will know what are the upcoming news before time, and that is very important, so you are always up to date with the timing of the news. So I will also be explaining everything as a step by step in this video. And first of all, you will be checking the fundamental analysis part, the news, and then if you have news as explained before, then most probably the market will be trending. If you don't have news, then most probably the market will be in ranging mode, but that is most probably the highest probability. Okay, so sometimes even without news, even you will check the site for the news and you will see that all the news don't have a big impact. They are all yellow. Okay, so they don't have a high impact, but even though you are still, the market is still trending. And sometimes you have big news and the market is still making short faces, as here the market is moving, making short faces, moving away from EMA 200 and returning shortly, and that's it. This is ranging mode, as you can see. So but you have to take into consideration the news and their timing. Once this is done, so first of all you check the news, their timing and everything. But since you are using the whole secret, the 1% trading strategy, you don't have to worry about if it's in trending or a ranging mode. Mainly, you don't have to analyze this thing because you are using the whole secret, and that's the main 1% trading strategy, one of its key secrets. So let's start to show you how to be applied. Now I will be applying, I will be entering, I will be making some entries, and then I will be showing you from, I will be going back with the charts to show you from the beginning what is the best way of practicing the 1% trading strategy, what we have learned in the first part. And now I will be showing you taking some trades if that's possible. Okay, so for this one here on the euro dollar, on the AUD dollar, as you can see, the price moved below EMA 200. So this phase started from there. And you should have sold here and sold and sold and sold. Kept on selling, and now also you are selling. And as explained in the first one, you will have to close when you are in a loss. You are searching losses in the right sense, as you know. So here I will start selling just to show you the idea behind it. Okay, but imagine that I have started selling from there, from this point. If you have opened the chart and the chart is here, don't start selling from here. Okay, never start selling from here. You should always try to start from the beginning. This is the best. So you will be looking for the price to cross EMA 200, and then you will start selling from below. And if the price is crossing EMA 200 from the above, you will start buying. But pay attention. As explained in the first video, you will be seeking losses in the good sense, okay, as explained before. So you have, for example, here you are selling and the price returned toward EMA 20. Mainly there you are losing. So here you should be closing. And every time the price is moving downward and then returning, if you are in a loss, you should be closing. That's the whole theory. That's the complete theory. But you need the most practical way. So pay attention. You are not going to apply the theory typically or in some way that is not the best practical one. You need the best practical way. So that's why I will be explaining here the best practical way and showing you why this is the best one. So as you can see, I started selling. If the market keep on moving downward, I will be selling further. So I'll be making another sell order, let's say. And also I'll be preparing my sell stops so we can leave this chart and continue the explanation meanwhile. Okay, so I'm preparing my sell stop. Of course, you should know about sell stop. This is the whole beginner's guide, which is also available in one product on my website, and also fundamental analysis, as we were talking about. It's also available on my website. And the most important thing is to control your emotions, the trading psychology, which is very essential. It's an essential topic of the complete trading skill set, and also the trading psychology ebook is available on my website to learn everything the right way about trading psychology, which is essential with your strategy. So here I have prepared my selling stop orders, so the price will be opening these ones. Okay, and I will leave them for meanwhile just to show you what is the best practical way, and will be returning to these. Okay, and also I will be okay, so let's start. So here we are on the AUD dollar. As explained, whenever the price is going downward, you have to start selling till the price returns toward EMAs. Here you will be closing in a slight loss. The first loss you will be closing. Also from there, you will be selling. When the price is returning, here you are still not in a loss, so you keep on it. And then here you are in a loss, so you will be closing here. Okay? Mainly you will be closing there because here you are in a loss. So that's what explained. But if you try to do this, you will see that it's not so practical. You will be making lots of losses, lots of entries. So here selling and closing, selling and closing, selling and closing, selling and closing. So it's not that practical, too many entries. And if you are trading from a commission account, you will be paying lots of commissions because of too many entries in this way. Okay, so what is the best practical method? First of all, since we are talking about commissions, it's always better if you trade with an account that have zero commission and even slightly higher spreads. So always when taking an account, you have to compare with using the whole equation. which is commission plus spread. And if you have two offers where the first one has some commissions and very low spreads, you have to add the sum per lot, for example, and compare it to the one that have only spreads without commission. If the one without spreads, without commissions is lower, the sum, then completely take the one without commissions. But that is very rare and almost impossible. So what you will find is big spreads, high spreads, but with zero commissions. So if the high spreads, the difference is slightly more than commission plus spread account, take the account without commissions. Trading an account without commissions is the best type of account for scalping. And at the end, of course, it depends on the way the trader wants on each country and everything when choosing an account with a broker. But mainly, this is one of the preferred account to be trading a high spread one without commissions, but to make sure that spreads are high but slightly higher than the one commission plus spreads, because commission are fixed. So whenever you are opening, you are paying commissions. But on the other hand, on the other account, big spreads can be broken. When you are making very large pips, spreads are nothing in front of your winnings. But commissions are always fixed. Either you are winning little or you are winning big, you have to pay these commissions. Okay? So, and also about the timing of the market, you can trade it at any time during any session at any trading day. What's important here is to only avoid the first and last hours of any trading day, because at the first and last hours of any trading day, the market is very slow at that time. And in scalping, it's always recommended to trade high volatile times. So just avoid the first and last couple of hours of any trading day, and you can trade it at any time during any session. Also for the news, just pay attention to their timing and you will continue your trading. Now you will see the best practical way. You will not be afraid of the news. You will not be afraid of or analyzing if the market is in trend or ranging mode. Okay. So now you know that you are looking for the best practical way, and selling and closing whenever you are in a loss, which is the whole theory, the essential. It cannot be applied every time because you will have too many orders and everything is very well explained. So what is the most practical way? The most practical way is this one. Whenever the price starts crossing EMA 200 from below, you should start selling. Price is going down further, I sell further. So first order here, second order here, third order sell, sell. 4 sell orders. Price returned, I don't close. Where do you close when the price reaches EMA 200? Here you will be closing, and these 4 selling orders are going into a loss. But imagine this is nothing. You are here 0.77331 toward 77391. Imagine. Okay, 60 points, nothing. So here we have closed with a slight loss. Then we sell again, 2 orders, 1 and second. Price didn't reach EMA 200, we don't close. Then we keep selling, another one, another one, another one, another one. Try to keep a constant distance between each other, between each of your orders. Constant space, okay? Try to make a constant space. And of course, when you are starting out, you will not be using lots of orders, and you will be starting with a micro lot, definitely. And of course, at the first, you will be trading on a demo account, even though on a demo account, you will be using micro lots, of course, to practice it and become great at applying it. So, first sell, second, third, fourth, and we keep on selling till there, with a constant distance between each of them. Of course, you cannot have a strict constant distance, but try your best to have a constant distance between your orders, okay? And of course, you cannot have it exactly a constant distance. So no worries about it. Price returned, didn't reach EMA 200, we don't close. Then it's returned. here you don't sell again. You have already sold these price levels. You don't resell them again. You start selling from here. Pay attention. Okay, so never repeat two selling orders. Sell, 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 never. One sell. This space has already been sold. Okay, repeating this space, I do nothing. I wait for the price to break this space. From here, I start selling again, selling again, selling again, selling again. Imagine, here we are, 77,100 almost, 77,170. And you started from 77,390. That's at 200 points. And you will be closing when the price is reaching EMA 200 on 77,280. So here you will be winning because all of these are sell and these also are sell. These are in a loss from below to EMA 200 loss, but from here to EMA 200 are winnings. So you have closed here on EMA 200 with profits. And now you will be saying, but here it was losing 60 points. Okay, but pay attention very well. This small, let's talk in distances, which is the same as points. This small distance, okay, is covered directly from this one. Selling from here to here, you have won this small distance and more even till there. Okay, so this small distance is offset here. You have won what you have lost here. There. From there to there, you have won what you have lost from there to there in your previous entry. Then everything else toward EMA 200 is a win for you. Okay, and moreover, pay attention. You didn't just win this distance, you have flipped it. Why? Because from here to here, won this distance. Continuing to here, times 2. Continuing to here, times 3. Pay attention, with using only these selling orders. With using only these first 4 or 5 selling orders. These 4 or 5 selling orders are making for you 3 times the loss that you have lost here. And this is the accumulation effect, the compounding effect. Don't forget that after these first 4 or 5 orders, you have continued placing selling orders, selling orders, selling orders, and all of these are accumulating. So you're not just offsetting this one, you are accumulating, you are making profits of profits. Like the interest rate, you are accumulating, you are compounding your winnings, and when price is there, you will be in a huge profits. But you will be closing when the price returns to EMA 200 because you never know how long it's going to be this trend. So you may say closing here is better, yes, but you cannot close there. Why you didn't close there or there? Okay, it's not specific. You have to close when the price exactly reaches EMA 200. Here you will be closing because sometimes this one was short and sometimes it's going to be very, very, very long toward EMA 200. Okay, other times it will be very long. So this one is really very short. Here, buy, price return to EMA 200, close with a loss. Also, buy, one order, close with a loss. Here, no selling orders, it's very close to EMA. Here, one sell, close with a loss. One buy, close with a loss. Also, some sells, close. Selling, and closing. Buying and closing, selling and closing. Also, buying and closing. And here, also buying and closing. So, 2 remarks, very important remarks here. First of all, at this one, when the price is moving downward, let's see it here. EMA 200 is always moving with the price, with the direction of the price. That's why your stop loss, first of all, is here. When EMA 200 is moving downward, you move your stop loss, you move your stop losses, you move your stop losses, and you keep moving your stop losses until there. Okay, so EMA 200 is for your advantage. And in this one, when the price returned immediately, EMA 200 didn't move because the price was, and that's one of the secrets using EMA 200. It's not like EMA 9 moving immediately with the price. It takes time to move. So when the price is going upward, buy, and then close here, you have closed at the same level where you started and not at a lower level. But if this one continued, EMA 200 would have followed it. Okay, let's continue. This one is great downtrend. This one is okay. So at this time you will not be trading mainly because these are the last hours of the day. Also, these are the first hours of the day, and starting from here mainly. So buy and close. Now sell, take a look. We are on 0.77087 till 0.76876. Imagine 77 till 76,800. Okay, it seems too long, so but it's really nothing in front of other trends. You will see other very big trends. So selling from here, first one, selling, keep on selling, and you will be closing there with a huge profits, even though 200 points, but you are accumulating and accumulating and accumulating. So once the price is there, you will be making lots of profits once the price is there. And I'll continue from here. So at this one, selling and closing there, buying and closing here. Now again, take a look at this one. That's what I'm talking about. You will be waiting for this tough trend, and you don't have to analyze the market when it is on trend or in a ranging mode. Okay, you will be waiting for this one, for this tough one, and there you will be closing, waiting for this one, and there you will be closing somewhere. Okay, so you will be closing on EMA 200 definitely, but the idea is that you are not waiting or analyzing if the market is in a trending mode or a ranging mode. You are just trading and trading, following your strategy, and this very big trend that it's going to flip your account, or at least making very huge profits for you, is going toward is coming your way. Just wait for it. Have a good balance to be able to afford these slight losses, to be able to wait for this tough trend. And telling you about the timing of this tough trend. The timing of it, it's always coming after mainly, most probably, some consolidation. Okay, so if a long time passes without the market trending, now it's time for it to trend. Okay, so that's one of the indicators, but you cannot know for sure exactly at which second, at which time it's going to start. You have to keep following your strategy. Once this trend is starting, you will be flipping your account, or maybe, or at least making very huge profits. Take a look at this one. Going from 0.76894 toward 0.77386. So 77,300 and 76,800, 500 points. But you are not making 500 points, so with one lot you will be making $500 because you are accumulating your profits. You will be making much more than $500. It's nothing, because I'm saying if you are using in one lot, of course, just to make things simple, but you will be starting with a 0.01 volume. Okay, so because first buy, second buy, here nothing, here nothing, because we are repeating this phase. Buy, complete on buying till there. These last 3 or 4 buys were in a loss, slight loss, nothing. Imagine just the difference from here to here, 30 or 40 points, and you are winning all of these 450 and almost 500 points. Imagine, just take a look at this trend and think about it. Just take a look at this uptrend and think about it. Imagine when you are riding it, and it's always there. It's very frequent. It's always there. Okay, and we continue in the same way. And here also it was a great one. Buy, and then didn't touch. I don't close. Didn't touch till there. Okay. Meanwhile, you have closed with some profits also, because EMA 200 has moved from 77,380 towards 77,480. So keep buying. Slight losses here, and all of these accumulation compounding profits are won there. And at this time you will not be trading. At this time also, these are last hours of a day, first hours of a day. This one, sell, 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 big profits. This one, take a look at this one, sell, 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 and bigger profits. And sell, 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 and big profits. So I will be moving to where we are now, where I have placed my orders to be showing you. So I will be going directly. And here we are now here. So now I should have started selling from there, sell, 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 and that's why I have shown you during these two. I am selling and selling because I am completing the selling process that should have started from there. Okay, and imagine if the price is still continuing. So here my stop loss is there. And when I first placed, imagine I have first of all placed my order when EMA 200 was still there. Okay, so now EMA 200 is there, so my stop losses have moved from here to here. That is also in your advantage. And now the price will keep on moving downward, and I will be opening more selling orders. As you can see, I have prepared my stop sell, my sell stops, okay, to be selling more and more and more. But now I will be closing them, so just to show you the idea. Okay, so you should have been selling from the beginning till there and also selling more downward. So I'll be closing this one and this one and my sell stops also. Okay, so that's perfect. Now the idea is very clear how to be able to make it. So I'll be moving to other charts to show it to you on other charts also. Let's check for the euro dollar meanwhile. Okay, so here we are for the euro dollar. That's a great one to be starting with. We have returned back a lot. Okay, so that's perfect. So here is almost after some hours of the beginning of a trading day. So you will be trading these hours, selling, selling, closing. Okay, let's get it back. Selling, selling, closing, buying, buying, closing, sell, 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 and close. And also here we will be making the big one. So let me make some remarks before continuing. For the volume indicator, as what you need, since you are using the 1% strategy, of course volume indicator is gives a lot of analysis and everything, but here you are using the whole secret, so you don't need to analyze the volume indicator so much. What you just need to pay attention to is the volume. So as you can see here, the volume is crossing EMA 20 and we have high bars. It means volume here is higher than there. So definitely trading at this time, it's always recommended to trade high volatile times, high volume times, and scalping. So trading at this period is better than trading at this period. So what you need from the volume indicator to always be high. Okay, if it's low, the chance of the price trending is lower, but still the market can still trend even with a low volume. Okay, but with a high volume, it has a higher chance of trending, and sometimes it starts with a low volume, the trend, and then many traders realize it and start entering it and start making volume very big because too many traders have entered. So sometimes a trend starts with a low volume and then get bigger. But what you need is, what is better is to have high volume. Okay, but also you can trade low volume. Just that's it, the idea. So always pay attention, and when volume is crossing EMA 20 and holding above it for some times, it means the market is in great mode, in a high volatile mode for scalping. Okay, that's it. So EMA 20 is to measure if volume is high or low. If volume is above EMA 20, holding above it for a long period, it means good high volatile market. If volume is below it, it means low volume. So you need EMA 20 to measure it. Okay, that's what we need from the volume indicator, explained very well. Another remark is, when you are selling or buying, you have to control your emotions. For example, here the price is trying to reach EMA 200 but didn't reach it immediately, and at this one, if the price slightly reached EMA 200 and return, don't close here. control your emotions, okay? Let it at least cross EMA 200 by slightly, okay? Let it at least cross it slightly. And even though if you have closed here by mistake, you will start reselling again and lose this little distance. That's fine. But just control your emotions. Don't be afraid. And if you are adding on your sales, you are always, when you are trading, you are always thinking and waiting for this big trend. Don't be afraid of riding it. Don't be afraid. Control your emotions. I have explained everything in the trading psychology book. Definitely you have to control your emotions. So let's start again. Sell, sell, sell. Price is returning, and in this phase I don't resell. I never resell. I have already sold. I don't sell again. Keep from there. Sell, 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 sell till there. Price returned. Okay, that's fine. Slight loss, big wins with accumulation, with compounding. Okay, we continue. Buy and close, buy and close, sell and close, sell and... Okay, here we have this one. So as you can see, before entering into this trend, as you can see, the price, what you are doing in this strategy, it's like buying the lottery. You have to buy too many tickets and lose a little bit, maybe some dollars, but when you win, you will hit very big. And that's what you need to trade, you see. So when you are losing, it's a lottery ticket, okay? You have lost it. Just think of it like that to be able to control your emotions. You have to accept losses in trading, or you will never be able to succeed and join the 1% club. You have to accept these losses in trading. I told you the main secret, the main difference between successful 1%, most successful forex traders, and the other 99% is that the 1% most successful forex traders can first of all control their emotions and accept losses. They accept losses. This is one of the main differences, and that's why you always hear about the 99% losing in trading. That's why you always hear about the 99% blowing their accounts in trading, because they are not doing the lottery mode. They are doing the reverse. They are winning and winning small, winning small and winning small and winning small, and then when they lose very big. So this is the 99% mentality. They don't accept losses, they don't accept failure. And as explained in the first video, when you start accepting failures, when you start seeking failure, here you will start winning. And in this video I'm showing the best practical mode to apply this strategy. Keep focusing on it till the end. So from here we have accepted all of these losses, okay? We have accepted this loss. We have a good balance. So even though if you are starting with a high balance, start with 0.01 and then scale it up. Start with micro lots, start on demo account, then with micro lots, okay? Always keep it safe to start being confident about your strategy. If everything is working fine, then you can scale with proportion to the balance, okay? But always start on a demo account. Get the whole practice that you need to become master at trading it. Okay, so sell. Take a look. Before talking about the technical issue, just I will be showing you how much it is. 21,574. 1.21574 toward 1.21335. okay, these are 200, but as you can see it took lots of time. So selling from here, sell, 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 and close here with a slight loss from there, and all of this accumulation is a winning. Sometimes the market leaves EMA 200 and get back to it after making 1000 points. Imagine. So for example, the euro dollar goes from 1.21300 to 1.22300 in an uptrend, or 1.21300 to 1.20300, and sometimes more than 1000 points, especially on for example, GBP dollar is a highly volatile one. We will see the GBP dollar. Okay, so keep waiting for this one. There again, buy, EMA 200 moved a little bit, so we are mainly on a winning or a slight loss here. And again, here you will not be trading these last hours, first hours not trading. You can start from here, buy, and close. And this one, starting from 21,400 toward 21,200. Also a good one. Sell, and continue selling toward here. Don't close here. Okay, sell. Don't close here. Control your emotions. Price didn't cross EMA 200. The opposite. When this happens, usually and most often, it indicates that the price is going to continue this downtrend. So don't leave now. Okay, don't close it there. Keep on selling toward here and close there. And then the same process is repeated again and again. Let me check this one. I just want to show you one big uptrend or downtrend. This one is big, 200 toward 500, 600. This one is big, but I need the 1000 points. Okay, this one. 1.21500. Imagine 1.2900, 600 points. But pay attention. I repeat, you are not making 600 points, or in terms of dollars, if you are trading in one lot, $600. No, you are making much more than that, because you are accumulating your winnings. You are selling and selling. You are accumulating, compounding on your winnings. You are making winnings from your winnings, profits of profits. Like the interest rate, you are accumulating, compounding, and here you will be closing. Okay, so this one is great. This one is big enough. So don't be afraid of compounding. And if you are looking to be flipping your account, you will be waiting for such very big trends. Okay, and also another remark. In your trading day, once you enter such a big trend, don't enter the market again. Don't enter the market again at this day, any market. Okay, so when you have traded a one big trend in this day, you have made lots of profits, traded a one big trend, leave trading Forex for this day. Your day has finished today. Okay, because most of the time when the market makes one big trend, it's not so often that the market makes two trends in the same day. And all charts, this is one of the also other secrets. All charts almost act the same, because all of them are connected to each other, because you are trading this pair and this pair and this pair, but they all, for example, these two pairs, euro dollar, GBP dollar, have the USD in common. So if the USD is going up, then both euro dollar and GBP dollar will be going down, because USD is getting very high, so it's taking the euro down, it's taking the GBP down. And if the USD is getting weak, then you will see euro dollar going up, you will see GBP dollar going up. So there is always lots of common things between the charts, and they are almost always acting in the same way. So when euro dollar is in trend, you will see GBP dollar also is in trend, USD yen also in trend, AUD dollar also in trend, euro GBP also in trend, even XEU dollar also, and maybe also US 30, the indices. Okay, so since all of the charts are acting in the same way, you will be trading only one chart, you will be closing your orders on one chart, then you can open another trading in another chart. But here pay attention also that once you have ridden one big trend, make lots of profits from it, you can leave this trading day. Okay, and here I'll be showing you what I mean. So here you will continue. This one is great, selling. Okay, so now I will be showing you what do I mean. For example, here, starting from there, imagine this sell. That's a great one. Okay, if you have ridden this one, you can quit here. And if you didn't quit and you have sold again, that's also fine. Okay, so in this day the market made two trends, two downtrends, but usually it makes only one. Okay, most often it's only one. Okay, let's take a look here. For example, this one, great downtrend, and this one, great uptrend. So mainly why I'm talking about one, because if you have traded from here till there and you have catched these two trends, that's perfect. Of course, profit is profit, and the more profits you make, the better. That's obviously. This is not my point. My point is that you may have missed this one. You may not have been there when this trend happened, but you have catched this one. Once you have catched this one, especially that the market is closed from the closing of the day, stop here. Catched this one, stop here. Catched this one, you can stop there. Okay, or you may also have catched these two. That's perfect. But you only need one. That's the point that I mean. Your target in a trading day is to have only one. And in some days you won't have a trend. There is some days where the market is in ranging mode from the beginning of the day till the end of the day. You won't have any trend. That's fine. That's fine. Trading is not measured in a day. It's not a sprint. It's a marathon. Understand that. That's also one thing that the 99% are losing and the 1% are winning. This is the main difference. The 1% know very well that Forex trading is a career. The profits are measured monthly, weekly maybe, and yearly. You cannot measure it in one day, but the 99% keep on losing because they want to be making profits every day, every day, every day, day in, day out. That's impossible. You will be losing in some days a little bit, and in the other days when you are winning, you will be winning a huge and maybe flipping the account using the 1% trading strategy. Okay, so if in a given day you didn't have any trend, that's fine, accept it, that's fine. Have the 1% trading mentality. Okay, so two trends, and that's it here. I started from there. Let's say selling closed, buying closed, sell. Take a look. 1.2900, 1.21500, 600 pips. Imagine 600 points. 600 points. Imagine 600 points. Imagine. Okay, and from there you can quit trading this day, because if you have continued with these other losses, you see it, quit after making this trend. Quit trading this day. Do not move to other charts, because all charts are the same. Since euro dollar ended a trend here, GBP dollar will most probably also be ending a trend here, and the other one also. So quit trading at this point of this day. Leave it, go enjoy your day, and start the second day from there. At this day, buy, lose, buy, lost, sell, lost, buy, lost, sell, lost, buy, and you have closed here, maybe with a slight winning. I think slight winning from this one, because EMA 200 moved from here to there. Buy, slight loss, sell, slight. As you can see, at this day, what happened? You have lost at this day. You have closed with a slight loss. That's fine. That's perfect. Wait till the next day. You have opened your chart. Selling. This is a winning one. This is a trade. This is a trend, a winning trend. Okay, you missed it. You keep on here. These are slight losses, and from there, buy, and you are winning here. Okay, this is a great one. So you will be quitting there. Okay, so your losing days, your losing days are nothing. Okay, when you are closing in a loss in a day, it's a slight loss. When you are closing in a win, it's a very, very big win. That's it. That's the 1% mentality. It's like the lottery. You keep buying these tickets, losing $1 after dollar, dollar after dollar, to be winning lots, a big, huge number. okay, have this mentality, because the 99% have the complete opposite mentality. And you know that very well, that the 99% have a different mentality than the 1%. That's why the 1% are succeeding, the 99% are not. And the whole secret is shared with you in this video. So I'll continue moving to GBP dollar. Also, let's trade it from the beginning. GBP dollar, also learn this, is great at making trends. It's better than the euro dollar. GBP dollar make bigger trends. It's better, it's faster. Okay, it's highly volatile. That's it. So buy, lose, buy, close with a loss, sell, sell, sell. You don't close here. Sell, sell, sell. Okay, so this one is 1.36800, 1.37100. That's perfect. Almost 300 points. Also, these are some losses, and this day is ended with, actually, if you have ridden this trend, you will be quitting here. So these losses are all eliminated. That's why I'm always advising you it's always recommended actually to have only one trade and quit after making this one trade. Okay, that's it. Of course, you can trade if you want more, but you are creating the risk of losing, because the market most often make only one trend a day, or maybe two trends. Okay, but why risk it here to obtain the second trend? Why? You have already made profits on the first trend. Leave it here. Okay, second day started, definitely second day started from here. Okay, so these ones are not to trade, the first hours. Here is perfect. So buy, lose, sell. Start selling, selling, selling. We are taken from 1.36690 almost toward 1.36300. That's almost 400 or 300 points. Sell, 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 sell. Close here. Also closing, and buy, 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 buy. Imagine this one. 1.36460. Buy, 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 buy toward 1.37250 almost. That's 800 points. Told you that GBP dollar will be making also 1,500 points. Imagine from here, you keep on buying toward this one. Okay, then you have closed at this day here. At this day, you were losing, slightly losing, and this one. Sell, 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 and here you have won. And at what time it is? It's still, we have still some hours of this day. Mainly, it's better to be quitting, because at the end here, you didn't win. Or if you have continued, that's fine also, okay? So, mainly, your goal is to have a one big trend. Once you are having this big trend, you can close. If you have made huge profits here, if you have flipped your account, why risking another one? Why? Okay, close this day and move to the other day. And if you have made a trend, a small trend, let's say, okay, let's say this one, you have made big profits, but you are still wanting more, you can keep trying for another trend. You are buying more lottery tickets, let's say, so you can keep trying for another one, and here you've got it another very big one. Okay, so sometimes if the trend is not so big, and especially if the trend started at the beginning of the day, so here it started after 4 hours of opening of the market, okay, and it was not so it was big, but not so big, so here you still have the whole day, then you have lots of chance of having another big trend. But when this trend ended, you still have only 6 hours of this day. You don't have a big chance of the market trending. The market, pay attention, the market may start trending again, but you don't have a high chance because it has already trended. And now it's time to, the higher probability is that the market now will be going into a ranging mode. Okay, so if you are closing on a trend at the beginning of the day, if you are still having lots of hours of the trading day, you can keep looking for another one. But if you have closed on this big trend and you still have just 5-6 hours or less, it's not advised to be looking for another trend. Why risk it? Why? You have already flipped your account with this uptrend or made huge profits. Why are you looking for risk again? Leave it, quit the next day. The next day also, starting with a loss, selling, win, and also quitting here. You still have 7 or 8 hours, you can quit here. Okay. At this day also. At this day, for example, it's a lot. No, it was a losing day till this trend started. So at this one, keep buy. Imagine from 1.36500 toward 1.37, almost 400. This is almost 1,000 points. Imagine 1,000 points accumulating buy after buy. Price didn't reach EMA 200. Buy after buy. Imagine, just think of it. Just really take a look at this uptrend and think of it. As you can see, no words, no comments. Okay, so here what do? You still have only 3 hours of the day. What do? You quit. You close on your trade here. Okay, you don't trade this one. You have already made a big trend and you don't trade this one. You will be moving to another one. The next day, a great selling one. For example, here this trend started in the beginning of this day, and it was not a great downtrend. It was not so big, so you can expect. It's not for sure, but you can expect the market to be making another trend. So you can be using these winnings that you have made in this downtrend. You can be using these winnings to enter, to catch another trend during this day, because this day is still in the beginning. So from there, lost again, and finally this downtrend, what you are looking for. You have used your winnings to do these other tickets, and from there you are winning a lot. From there, this trend is winning a lot, and also if this one was not enough, you can trade this one. So these two should be more than enough for you to quit here. Here you should quit. Okay, and that's it. So another remark, another important remark. Pay attention always. Why do you need the other EMAs, since all what you want is EMA 200? You are trading away from EMA 200 and back to EMA 200. Why? If you want to understand it, actually when you are ordering a mail and you are waiting for this mail, what can you do? You can track it, right? So for tracking your order, you will be using the other EMAs, but you will not be using the other EMAs to decide either sell or buy. No. The other EMAs are used to track your order. That's it. So if for example, in this one, what do I mean by tracking your order? This order here, this selling from there, let's say, this order is moving very fast. It's coming to you in a fast way. Why? Because price is always below EMA 9, returning to the first support area between EMA 9 and EMA 20. Okay. In downtrend, you have 3 support areas. First one is here between EMA 9 and the 20. Second one is between EMA 20 and 50, and the last one between EMA 50 and 200. The first support area is the weaker. Is this one the weakest? This one is most powerful. The last one is the most powerful. Since your order is not even reaching the first one, rejected immediately, or in other words, without using support and resistance, but pay attention that also in uptrend it's similar. You have 3, let's say in this uptrend you have also 3 ones. First resistance area, first support area. Here we were talking about resistance area. Maybe I have said support area. Of course, no, it's a resistance area. We are in a selling trend, shorting trend. So first resistance area, second resistance area, third resistance area. Here in uptrend, first support area between EMA 9 and the 20. Second support area, more powerful, between EMA 20 and 50. Most powerful support area, the last one, between EMA 50 and EMA 200. Okay, So in uptrends you have these three support areas, in downtrend you have these three resistance areas. Let me continue the idea. So when the price is moving downward without using support and resistance, only EMAs, as you can see, price is always in the first EMAs, so it's moving very fast. This trend is moving very fast. It's making larger pips going down further and further and further without returning, without retracing. Now it has retraced, so it's slower, but still rejected immediately on the most powerful resistance area. Continuing. So here you are tracking your order. Here your order is very fast. Your order is slower. Your order is faster. Okay, and you will be closing on EMA 200. So it's just to track your order, to monitor, to be monitoring your order. Okay, but never more than that. Don't use it more than that. You will just be monitoring your order. And here we are also there. So you can remove EMA 9, 20 and 50 if you want, and also the volume indicator with EMA 20 applied to it, but you don't have any monitoring then. So you will be guessing, where is it? Do we have big volume? Is the market in a trending mode? Do we have big volume? You will be asking yourself these questions. Why? Place the volume and keep your eye on it. So if volume is always above EMA 20, that's perfect. You have high volume. You can compare it also from a period. For example, at this period, volume is higher than this period, so it's getting better at this period. You can expect larger movements maybe here. Okay, so everything is monitoring. So monitor it via volume indicator with the EMA 20 applied to it, and also monitor it via these EMAs. Okay, so for example, let's say this one. It was doing very well below EMA 9, but return to EMA 50. It's not. So whenever it's retraced, it's not good. Okay, but what can you do? You will be only waiting for EMA 200. And here you have closed on EMA 200. You have started from there, EMA 200, and it was going down. So that's also good. It's not a great opportunity, of course. It was not a great downtrend, of course. And maybe here you have closed with a slight loss. But I'm talking about the idea of EMAs. For example, why this order is not so perfect? Because as it's not so fast. Because once trending down, market retraced immediately between EMAs, then trending down, then retraced between EMAs, then down, retraced down. So it's not so fast. It's coming very slow. Pay attention. If it's doing like that, it may start from there drifting downward in a very fast mode, especially if news are released and made a big impact on the market, especially. So, but you don't need, it's not a rule, of course. Okay, maybe suddenly the price start without knowing the reason, starts on trending downward. So if your order is not going so fast, I mean drifting down, retracing, drifting down, retracing, you can monitor it and you will be saying between yourself that it's not going so fast, but you have to accept it, and here you have to close. And sometimes after doing this, it will be continuing this downtrend. Okay, so the shape is always different. You have to get used to many shapes of the trend. Also in other shapes, like this one, for example, the V shape or the U shape, as you can see, in this time V and U, the market is going very fast, selling, but unfortunately returned also fast, but not as fast as the downward. It will be returning slightly more slower. Okay, so this one is almost 90 degrees, but this one is of course not like that. Okay, it's going in this way. So went down vertically and returned, retraced in this way. Okay, so here you will be monitoring, you will be just looking at these shapes of the trend. With more experience you will be able to know the shapes, but always you will change nothing in your this changes nothing in placing the orders or closing. Here also sell, close on EMA 200. Nothing is to be changed, but you are monitoring your orders with these EMAs. That's it. Okay, and with volume also you are monitoring everything. So EMA, the other EMAs and the volume are used for monitoring. And take a look at this uptrend. How beautiful is it, this uptrend? Imagine accumulating, buy, and closing there. Imagine that you have learned the whole secret of the 1% trading strategy, and now of course you know that everything is completely the opposite of the 99%. The 99% want to always win. the 99% are looking for making winnings from each opportunity, from each entry over trading, and they want to win in each entry. This is not forex trading. The 1% are losing and losing and losing, slight loss, slight loss, slight loss, till they hit big, this is the 1% trading strategy. One last remark: also, when you are trading it, everything is very well explained. And don't trade two charts at the same time, of course, to keep your margin safe. Don't trade two charts at the same time to keep your margin safe, to keep your margin in a good level. You don't want to run out of margin. So when you open your charts at any given trading day, you will be looking for the best opportunity. For example, here I have opened the euro dollar. As you can see, the euro dollar for this day, let's say, it has already made an uptrend. It has already made, and also a downtrend. So the probability of making another trend is still, of course, the market can start trending from here. But as you know, already made two tough trends. So why I would take this risk? Why? If the market continued in a ranging mode as showing here, why I would take this risk? And we still have almost like 5 or 6 hours before closing this trading day. So why I have ridden this one and ridden the previous one during this day, ridden these trends, these big trends. Why to take the risk of trading this one? Okay. So the idea here is you will be looking for the best opportunity, and as I said before, all charts are connected. So if one chart is trending, most probably the second one will be trending. And here, as you can see, for example, GBP dollar, let's see. As you can see, GBP dollar, when the euro dollar was in this uptrend, the GBP dollar also was in this uptrend, and everyone else also. The USD yen was, this is it, the USD yen now is in this one, okay, and the USD yen also was making an uptrend when the others were in downtrend, okay. The idea is that almost all of them are connected, and here, as you can see, the AUD dollar is in a downtrend now for the moment, while the others are not in a trend, okay. So pay attention. It's not a rule that if the euro dollar is trending, all of the others are trending. No, it's not like that. But it's if you want, they are connected since they all have some currencies in common between each others. Okay, so that's why you have to trade only one of them, and mainly, most often, you will realize, you will notice that, like here, for example, the euro dollar is trending up, also the GBP dollar is trending up at the same time. So why to enter these two uptrends? Why? There's no reason. You will be using lots of margin. Okay, so just trade one chart and always look at the best opportunities when you are opening your charts. Of course, the best opportunities comes always after some ranging mode like this one. Okay, so for example, here on AUD dollar, it was in a ranging mode. Price was reaching EMA 200 from very shortly away from EMA 200 and reaching it very shortly away and reaching it very shortly. So put your focus on it, and then you will have ridden this downtrend. And if you remember, at the beginning of my video, I have ridden this downtrend here. I have placed some selling orders. I don't remember where exactly. I have placed my 2 or 3 selling orders, if you remember, with the sell stops, because I knew that AUD dollar automatically will have the highest chance of trending down because it was in this mode. Okay, so that's it. You can only trade one pair if you want. Okay, the idea is to have 3 or 4 pairs, or 5 or 6. Okay, not the whole 28 major forex pairs. Okay, no, choose 4 or 5 forex pairs that have the lowest spreads in your account. I repeat, choose the pairs with the least spreads in your account. 4 or 5 is great. Then, in the metal, of course, XEU dollar is the best metal. Okay, and you'll be applying the same, of course. And in XEU dollar, you have lots of opportunity. Just take a look at this uptrend made today. Just from $1,845 toward $1,865. Imagine riding this uptrend. The XEU dollar is one of the best. Okay, so you need one metal. If you want, of course, you can trade only one chart. Okay, you can trade only, let's say, euro dollar. Okay, but the ideal is 4 or 5 currencies pairs, 4 or 5 pairs with the least spreads. Choose the least spreads and trade them. You are scalping. Okay, in metals, choose XEU dollar. Okay, and in indices, you can trade US 30. Take a look, it's now in downtrend US 30. As same as AUD dollar. That's what I was talking about. When one chart is in trend, also, it's very often that the others are also in trend. US dollar also was in this one raging mode and finally trended down. Okay, finally drifted downward. This is a great downtrend. And US 30 also as same as the XEU dollar. Take a look at this uptrend from the US 30 and also take a look at this downtrend from the US 30. Okay, so mainly what you need to have a good portfolio is one index, one metal, and 4 or 5 with lowest spreads forex pairs in your account. Okay, choose the pairs with the least spreads in your account. Okay, and that's it. That's it for everything concerning these. So you will always be looking for the best opportunity, and you will always be trading one chart, closing your orders in this chart, on this chart. And if you want to move to other chart or keep it on this chart, that's fine. But trade only one chart at a time. Don't have open positions on 2 charts at the same time. Never ever. And keep it also, remember also that when one chart is in a trend mode, most probably the others will be also in this trending mode. You will notice that, for example, now euro dollar is in ranging mode, GBP dollar also is in ranging mode. When GBP dollar was in uptrend, euro dollar was also in uptrend. Okay, and also notice that it's also one of the other secrets. For example, during this, one of the monitoring secrets, and you have written, let's say, one of these two uptrends, GBP dollar and euro dollar. Let's say on euro dollar you have seen that it has returned toward EMA 200, so you can expect that the GBP dollar will be returning toward EMA 200 very soon. Okay, as you can see, so this one has returned toward EMA 200 almost before 1 hour from this one returning to EMA 200. Okay, so it's expected, so you can use also this thing as a monitoring issue. Once you will look at the markets that are in a trend mode. Once one of them has returned toward EMA 200, meaning it has ended this trend, so the others will start following it, the other charts, most probably. Of course, this is only monitoring issue. Okay, so the other charts mainly that are also in a trend mode, when one of them reach EMA 200, you will see that the others will be also heading toward EMA 200. Most probably, we are talking most probably, it's not a rule. Okay, most probably the others will be heading toward EMA 200 and will be reaching it, ending their trends also as same as the first one. So this is also one of the monitoring methods. Okay, and later on, maybe with a very great experience, when you've seen that for example, you will be monitoring better your orders, and of course with more experience you will get more confident and you will be trading it much better. So everything is explained very well. Study it very well. Take notes if you want, and start applying. Practice makes perfect, and that's it. So I will return the charts. Okay, perfect. So this one, the AUD dollar, is in this trending mode, as you can see, where we have placed our selling orders. And as explained in the first, so just to finish this entry, I should have started selling from here. Sell. Now I am also selling. As you can see, I have placed my selling orders here. My stop sell here. If you remember, my sell stops. My sell stops were there. Sell. My stop losses are here on EMA 200. I started my stop losses were there. Now my stop losses are here, and my sell stops were all taken by the market. That's perfect. My stop losses are here, and my sell stops were taken. So I'm selling from the beginning, and now I will be in a very, imagine selling from the beginning. Now the account is in a very huge profits, and the stop losses are there instead of there. Okay, so in this way we have finished this entry that we have started at the beginning of this video, and that's it. That's everything. My best wishes in your forex trading career. Thank you for watching.